Hi, everyone. Thank you so much for tuning into this U.S. Grains Council Global Ethanol Market Outlook. My name is Isabelle Ausdal, and I'm the manager of Global Ethanol Policy and Economics here at the Grains Council, headquartered out of Washington, D.C. I'm going to give you a presentation today covering an intro to the U.S. Grains Council and our ethanol program, get into some market metrics with global demand for ethanol and an outlook there, some market opportunities and challenges that we see on the horizon, and cover some trends that we're seeing into the next marketing year and beyond. So a little bit about the U.S. Grains Council. We were established in 1960 to develop, represent, and grow markets for U.S. corn, sorghum, barley, dry distillers grains, insolubles, so DDGs, as well as ethanol. While our headquarters is here in Washington, D.C., we do have a full-time presence in 28 locations. Locations meaning both in-country and regional offices that you'll see illustrated here on the map. And we run programs in over 50 countries, plus the European Union. Something that's a little bit different about the council that keeps us in step with Illinois Corn or our sister associations like NCGA is we do not work or lobby directly with Congress. So domestically, our focus is on the executive branch. So the Office of the U.S. Trade Representative, USTR, as well as USDA's Foreign Ag Service to really provide that technical policy on the ground support in these key markets. Externally, we work directly with those foreign governments and foreign stakeholders to create policies with a role for trade. Ethanol is a really good illustration of that in our program because so much of our work we do is policy focused. Giving a little overview of our ethanol program, our department was created in 2017 when members saw an increasing market opportunity for low carbon fuels and demand, and U.S. ethanol producers were ready to supply. You'll see here, these are our focus countries that our program is currently working in right now, broken down into 3-tiered markets. So each tier is decided on by our ethanol A team and is then run those programs by our in-country representatives and staff. Want to pull your attention to this statistic at the bottom because I think it's really important to illustrate that despite the COVID-19 restrictions over the last marketing year, the shutdowns and all of the supply chain disruptions, 2020-2021 marketing year was still our 5th highest on record. And this is increasing year over year. So despite these setbacks, demand for ethanol does continue to rise. And we're looking at 1.2 billion gallons this last marketing year. I'll give you kind of a snapshot of where we're at so far this marketing year, 6 months in, but it really is a good outlook and exports remain strong despite the disruptions that we've experienced over the last 2 years. I want to focus on policy again real quick because it is fundamental to our department and it is largely our focus. I think this chart does a really good job illustrating that because if you look pre-RFS, 20 years ago, the world consistently produced less than 5 billion gallons of ethanol a year. Let's fast forward to today. The RFS is implemented. We see other countries follow with fuel standards and mandates, and we are now global production as of 2019, 2020 was 32 billion gallons. So that's a 6-fold increase. And you'll see exactly where it starts with these policy drivers. The US share is in the dark purple, so you'll see that we make up the bulk of that production. Into 2021, we make up for over 50%. I think it's around 55% of all global ethanol production. So as demand continues, as policy drives that demand, the US will continue to be the primary supplier of this fuel. Now let's dig into where we are today. So we're 6 months into the current marketing year. Exports are estimated at around 715 million gallons. So up 21 million gallons just from this period last year alone. So we're seeing things begin to lift. We're seeing policies begin to move, and we're already seeing that demand and those resulting exports increase. You'll see here, Canada, we've had some significant gains in Canada. Orange yellow bar is 6 months of the current marketing year. The dark blue bar is 6 months of last marketing year at the same period. So we've seen big gains in Canada. Canada is our largest, most reliable year-over-year partner. We have a wonderful relationship with them. It's a great example of what free trade can do between two countries, and we continue to see that into the future. We also have had some gains in Brazil, as well as Mexico and a couple other countries to help offset those losses that you'll see in Canada, or I'm sorry, in China, in India, and Nigeria. These market losses are due to COVID restrictions as well as changes in policy. Colombia reduced its blend mandate as a result of a variety of domestic factors. So we saw some changes there that did affect the demand and therefore the exports from the US market. But we're seeing gains in other areas that are helping to offset those. Further demand drivers I want to draw your attention to again is Canada creating a renewable clean carbon fuel standard as to be implemented nationwide. We have India has retained its goal to reach nationwide E20 blending by 2025. India does not currently import fuel ethanol. It only imports industrial ethanol. So if we could open up that fuel market, if we could help supply that very ambitious goal, these are going to be drivers to increase that 715 million gallons where we're at now. So sorry, it's a little blurry, but so we'll see, like we said, global ethanol demand growing following these setbacks. This is some information from Platts. So Platts Analytics, which gives us some outlooks on the biofuels market. Right now we're looking at demand for ethanol to grow from around 27 billion gallons a year globally, global demand, in 2022 to over 33 billion gallons by 2040. So about an 8% increase, and this is billions of gallons. Looking then kind of to the right at the blending fuels, the biofuels blending rate by region, we'll see countries like Europe begin to transition to more advanced feedstocks. So that's where their blend rate will go up, while we'll see countries like Latin America, North America, and globally trending upwards as ethanol is 3/4 of that projection. So global blend rate increasing to around 8.7% of total fuel stock. So biofuels are consistently taking more of the conventional gasoline pool and coming in to supply that demand from those regions. Market opportunities. Right now, we're in the right markets. We're making progress. We're seeing policies expand to work toward our A-Team's goal of reaching 4 billion gallons of exports by 2025. So Canada, Brazil, the European Union, South Korea, these are all areas that we've put a lot of energy into, and we're seeing a lot of return. So Brazil recently lifted its 20% and then 18% and now 0 tariff on US ethanol imports into the country. South Korea is utilizing industrial ethanol imports. So again, similar to India, no fuel right now, but making progress in that market and also expanding the use of industrial ethanol at the same time. This temporary removal of the Brazil tariff will kind of drive some new developments, and we'll see what will happen in China as we've seen that market be a bit volatile over the last couple years. Sustainable aviation fuel. If you haven't heard about it by now, here we go. We have continued offtake agreements on ethanol. Corn-based ethanol is an approved feedstock for sustainable aviation fuel. It's currently being produced by Gevo as well as LanzaJet. So we have kind of offtake agreements coming into place there. ADM recently signed a memorandum of understanding with Gevo to convert around 900 million gallons of ADM produced ethanol which would translate into around 500 million gallons of sustainable aviation fuel. So that direct work is going to create a new market opportunity that we haven't quite seen before in the industry into the next marketing year, and definitely into 2030, 2050 and beyond. The environmental narrative we have is strong. The science that backs it up is there. Now we just need to find, how do we get more buy-in? How do we expand this message and really carry it to the net zero area of climate? So this is going to be something that is from the DC side, something we're really invested in, and making sure we create the right narrative and the right audience and really get conventional ethanol out there as a very viable option to immediately reduce your GHG emissions from transportation. Looking into the long term, we're going to have that environmental buy-in again. That's going to be very key in how we talk, but also removing the trade barriers. This will be expanding and addressing policies like in Japan. Japan currently blends ETBE rather than the direct use of ethanol. So a possibility for them is to utilize direct blending to meet their Paris Agreement net neutrality goals. Canada, again, has that fuel standard coming into place. The UK recently implemented national E10 blending. So the rollout of that has been successful so far, and they plan to expand it into Northern Ireland yet this year. India, lack of market access for fuel, but strong market access and share of the industrial market. Let's see how they pull out with that policy. Let's see how the producers do. US Ethanol is there to back that up for that national E20 blending goal within the next 3 years. Nigeria has had a policy, E10 policy on the books for a long time, but has never been enforced. So we're working with some programs there to set up a domestic industry, help supply them with a low carbon fuel, and work in tandem with the stakeholders in that country. Colombia, we have had some developments there. It's going to be a trade barrier. We have a looming countervailing duty case being filed by their domestic industry. It's something we've seen similar in Peru that we've overcome in the past, but this will be a measure that we're going to have to put some energy into from the domestic side and dispute those claims that they've made against the US industry. Tariff parity with gasoline and other oxygenates. Ethanol has a higher average tariff in a lot of countries than traditional gasoline, aromatics, and MTBE. So what we can do there is really show the advantage of free trade of ethanol, where you lift those direct tariff barriers and have the more affordable flow of this fuel into the countries. And we've also seen the return of economic benefits. So we didn't really see them. We had a rough couple, we had high prices for a while there, but we're seeing the economic benefits return. We've seen in Brazil where they did cite inflation as one of the major causes for to decrease and remove that tariff against US ethanol from 18%, and then the removal. As inflation continues to affect the end consumer, we might see these economic drivers also further demand for the product. So thank you so much. This was a quick market update. I'm going to leave my email address here and happy to answer any questions you may have. Please reach out. We definitely could not do this without partners, and really appreciate the support of Illinois Corn. I'm from Illinois. I'm from Rock Island County. Grew up around agriculture, raised sheep, helped with the local grain operations. So this is an industry near and dear to my heart, and I love being able to work with you and appreciate the support with you and all of our partners around the world. Thank you.